Most traders are addicted. Not to profits, not to discipline, not to mastery. They're addicted to clicking. Every notification, every breakout, every candle that twitches. They think movement equals progress. But here is the uncomfortable truth. The market doesn't pay you for effort. It pays you for precision. And sometimes, the most aggressive move you can make is absolutely nothing. Today, we're going to destroy one of the most dangerous illusions in trading, the illusion of activity. And by the end of this video, you will never look at doing nothing the same way again. Part 1. The illusion of activity. We live in a 24/7 world. News never stops. Charts never sleep. Apps are always in your pocket. You wake up, Asia moved. You check at lunch, Europe pumped. You check at night, US session reversed everything. Your brain receives one message. If I'm not in the market, I'm missing something. But here's what's really happening. Your brain is confusing motion with progress. It's called action bias. Humans are wired to feel productive when we do something, even if that something is destructive. Imagine a retail trader named Daniel. Daniel opens his phone 30 times a day. He sees micro movements. He trades small breakouts. He moves stops. He closes early. He re-enters. At the end of the week, no huge losses. No huge wins. Just a slow bleed. -2%. -3%. -1.5%. Death by 1,000 clicks. Now ask yourself, was Daniel unlucky? Or was he addicted to activity? The market doesn't reward constant presence. It rewards selective aggression. Part 2. The cost of small losses. Let's talk math. You have $10,000. You take 3 small losses of 2%. That's 6%. Now your capital is $9,400. To recover back to $10,000, you don't need 6%. You need more, because percentages work against you. Capital preservation is not defensive. It's offensive. Avoiding 3 mediocre trades is equivalent to catching 1 strong 6-8% winner. Professionals don't look for trades. They wait for asymmetry. Retail traders fear missing out. Professionals fear being undercapitalized. There's a massive difference. Part 3. Story of 2 traders. Let me tell you about 2 traders. Trader A and Trader B. Both start with $20,000. Trader A trades daily. He feels sharp, active, involved. Trader B trades maybe 4 to 6 times per month. Trader A ends the year up 12%. Trader B ends the year up 38%. Why? Because Trader B only entered when higher time frame aligned, liquidity was clear, risk-reward was minimum, 1.3, market structure confirmed bias, volume supported breakout. Trader A traded noise. Trader B traded inevitability. Silence is not weakness. It's filtration. Part 4. What is an undeniable setup? In 2026, volatility, random spikes are everywhere. Headlines move price. Algorithms hunt stops. Retail reacts emotionally. An undeniable setup has 1. HTF alignment. 2. Liquidity sweep. 3. Clear structure break. 4. Volume expansion. 5. Defined invalidation. 6. Minimum 1.3 RR. If even one of these is missing, it's noise. And noise is expensive. Professionals don't trade because price moved. They trade because probabilities shifted. Part 5. The psychology shift. Here's the real transformation. Stop fearing, I might miss this move. Start fearing, what if the real move comes and I have no capital left? The worst feeling in trading is not missing a pump. It's watching a perfect setup, with no ammunition. Imagine sitting there with 40% drawdown, and suddenly, the perfect structure forms. But your size must be small now. That is pain. That is the cost of impatience. Silence preserves power. Part 6. The Elite Performance Framework. Elite performance is boring. It looks like journaling, waiting, rejecting 90% of setups, protecting mental capital, saying no repeatedly. In a world obsessed with grind, the elite trader masters restraint. Ask yourself, are you trading to feel alive? Or are you trading to get rich? Because those are two different goals. Part 7. Transforming inactivity into a weapon. Doing nothing is not passive. It is strategic. When you do nothing, you preserve capital. You preserve emotional stability. You preserve clarity. You preserve confidence. The best predators in nature do not chase every movement. They wait. They observe. And when they strike, it's decisive. Trading is no different. Part 8. Practical framework for your next session. Before entering any trade, ask 1. Is this aligned on the daily chart? 2. Has liquidity been taken? 3. Is risks reward at least 1.3? 4. Would I be proud to show this trade publicly? 5. If this loses, will I feel stupid or disciplined? If you hesitate, don't trade. No trade is a position. Part 9. Final story. There was a trader who didn't trade for 3 weeks. His friends mocked him. You missed everything. Then one day, market structure aligned perfectly. Liquidity was taken. Bias was clear. Risk was minimal. He executed once. That one trade paid more than his previous month combined. Because he wasn't undercapitalized. He was ready. Silence created power. Conclusion. The market will always move. Opportunities will always exist. But capital? Capital is finite. Every click is a vote. Every trade is a cost. Every loss is friction. Master the art of the no trade. Turn inactivity into discipline. Turn discipline into edge. Turn edge into wealth. Because in trading, silence is not weakness. Silence is leverage. And remember, discipline builds empires. Silence builds wealth.